I think we're on.
Hello.
All right. So sorry, guys. We had a little bit of technical difficulty getting on this evening. So can you let us know in the chat box whether you can see and hear us okay now? So luckily we had the trusty Catherine on the other end of the telephone letting us know there's no slide, there's no you. All right, great. That's good to hear. Oh, thank you, Catherine. Thank you for letting us know. Clearly technology is not our regular day job, but we're certainly doing the best that we can with it at the moment. So, you know, we're turning into the little video stars, aren't we?
Well, sometimes.
We're trying to. Oh, great. Thank you. Thank you very much for letting us know that that we're all okay now. Good stuff.
All right. Get into it?
I think we should. So, first of all, we have been getting some really great feedback around these webinars, and we're just really pleased that we're able to provide this type of value. In a time like this, we're really mindful that people are just getting information overload. There's so many places sending you information. So what we really want to be able to do is help cut through that noise. We're very conscious, therefore, of making these information webinars very relevant and also reasonably concise. We intended a webinar yesterday that went for, what did it go for, like 2 hours? 2.5 hours, right? Yeah, and well, it was really hard just to stick with that, and it was just too much information at once and too much sort of fluffing around as well. And we just don't know, even in a time like this with people working from home, we don't know any business owners that have 2.5 hours just to listen to us. So we do want to keep them as concise as possible as well. So as usual, today shouldn't go for any more than 45 minutes, and we're hoping to give you some really valuable stuff. Before we jump into the topics du jour, or, well, it's not day anymore, it's, I don't know what, de nuit. So somebody who knows French can, well, nuit is night in French. So but I don't know how to do that. Anybody that can speak French, if you can let me know instead of de jour what it should be for the evening.
45 minutes. De jour.
All right. So what I do want to talk about momentarily is the Hendrie Group Online Business Hub. I feel like, and I'm sure you agree, Mick, that this is our most exciting initiative for COVID-19. The fact that we have created an online business hub that's free to all business owners. It's perfect for any business too. It's any business, shape, size, industry, really doesn't matter, because this is a passion project for Mick and myself. We feel that this is a way that we can actually make a difference. I think we've joked a few times that, oh, ce soir, thank you, of course, thank you very much, Kingsley.
All right. Send us off track, Kingsley.
We've got to have a bit of fun with it as well. There's just so much going on at the moment. So yeah, it's free to any business owners. We've joked a few times about the fact that, you know, when we had the bushfire crises, you know, we're useless with stuff like that. I mean, we've got desk jobs, so we really can't help much there other than donate. But when it comes to a crisis like this, oh my goodness, we have got business owners' backs, haven't we? So, in fact, I keep making this joke that, you know, I was born for this. And I know you don't want to get too off track, but can I show this, like the scary photo of me?
No. Yeah, sure. You're going to anyway.
Look, well, I just think, you know, I feel personally that I was born for this type of thing, to be able to help business owners through this. And when Mick and
I'm just worried about your technology.
When Mick and I were at we were at Moama when Victoria went into a state of emergency, and I was like, well, you know, COVID-19, I'm not scared of that. It should be scared of me. And so this was the photo that Mick took of me. This was I call it now my made for winter photo. Let's see. So now I need to tell me if you can see this photo, because if you can't see this photo, it's not going to bode well for the rest of the presentation because we've got some other things to show as well. No, my screen sharing is paused. Oh, that's not much fun. So you were right in the end, Mick. No, all right. Now there's a photo of. So we're not showing that photo then. Okay, so I will stop sharing and yeah, we'll see how we'll go for the. Oh, okay. It was there. All right. Do I need to show it again? I think people got the idea that.
It's all Donna and John too.
It's all Donna and John. That's right. Exactly. Yeah. So, okay, good. Yeah, I think it's important that this is something that we've been trained to be able to help people through. So the free membership is, it's been basically purpose-built to help lead business owners through COVID-19. And so you get your free membership, you get the weekly webinars, and those webinars, they're going to be about whatever is the most relevant that we feel at the time. Regular email updates, fact sheets and templates, and an exclusive dedicated Facebook page that you can get some access to Mick and I. So yeah. So if you haven't already signed up for that, we'll send out the link with tomorrow's recording. And moving forward, that is how you will find out about the webinars and get links to the webinars. So make sure that you do register. And if you know any other business owners that will benefit from a bit of leadership through COVID-19, do them a favour and pass this on. Oh, thank you very much. Bloody awesome Business Hub. Thank you very much for that. Okay, so 2 things that we want to focus on today. First of all, last week we talked about JobKeeper.
Actually, can we focus on my beard? I'm growing it.
Oh, yeah, Mick is growing his beard out. I feel a bit like is anybody old enough to remember Grizzly Adams? Yeah. So I feel like I've got, I'm living with Grizzly Adams here. So yeah, we want to talk a bit more about JobKeeper because even between now and Sister ABBA, yes, Benny from ABBA.
Let's move on. I shouldn't have brought it up.
Look, even in between last week's webinar and this week's webinar, JobKeeper has changed again, and there's some important things that we want to make sure that you are aware of. Something that we thought was going to be pretty freaking simple has just become complicated. And a Muppet, you reckon, Damien? Okay, let's go for that.
This is going to be like webinar 1.
Yeah, we've got to have a bit of fun. Yeah. So JobKeeper update, we'll do that. Also want to talk to you about the government or the taxpayer-backed 50% backed bank loan, because that hasn't quite turned out the way that we expected either. So I want to make sure that we can give you some information around that. So let's start with the JobKeeper update. I might pass on to you, Michael.
To someone from ABBA. I don't know who that is.
Benny.
Benny, right. Yeah. So yeah, JobKeeper. It's almost a
Benny Anderson. I just remembered his surname. He was married to Frida.
I would say, ABBA's not high on my interest list at all. But apparently I look like someone. But JobKeeper seems to be changing daily. I guess 2 weeks ago they enacted the law, which basically said keep writing law, and that gives us the instrument to keep writing law. So what happens? Every day nearly the ATO website is updated with new information. So we get a lot of questions about JobKeeper because there's a lot of money involved. If you're talking about 10 employees, $1,500 a fortnight, that's a lot. That's 15 grand per fortnight times 13 weeks. That's something like $195,000. So people are very interested.
Makes a big difference.
Yeah. So.
And also, I think too, business owners are getting pressure as well from their employees.
Yeah, that's a very good point as well, because there's a lot of employees that are relying on the perhaps additional money, as we're finding out.
Yeah, the employees that are earning less than $1,500 a fortnight are super keen on this initiative.
Yeah, we have one client. I'm digressing off the plan, but one client that has a casual employee earning $200 a week, but now wants his $750 and pushing pretty hard. And I think that is one key movement, which I'll come to, which everyone needs to be aware of.
Yeah.
But back on track, I think one of the key initiatives that was announced a week ago was business owners, and some good news, because business owners often pay themselves differently from employees. Obviously, they may not even pay themselves a wage if they're a partnership, or they might be a shareholder, so they take dividends. So there was some good initiative for those small businesses that do not pay themselves a wage. So I want to run through quickly what that means. And I've done a few videos on our Facebook. Hopefully they're decent, and people are looking at them. They're 4 or 5 minutes. But
well, make sure. Well, maybe that's something. If Kat, if you're watching, which I know you are, if we're not already, we should start working out a way if we can upload those into the hub. Yeah. So there's one central place that you can go to.
Yeah. Because I think for each business structure, there's now the ability to get $1,500 per business owner. So I'll run quickly through it because we've got a bit to cover. For a sole trader, you can basically just get this is all on the presumption that you reduce your turnover by 30%. And I will be doing probably next webinar on that one, I think, how to project 30%, because that is almost a topic in itself. As I said, they legislated the instrument to do JobKeeper, and they've left it to the tax office to keep writing law, and that's exactly what they're doing. They
love doing that. I've just written that down for next week.
So a sole trader can nominate themselves, so they'll get $1,500 a fortnight. So, you know, you don't have to go through JobSeeker, you get JobKeeper. Where you operate through a partnership, one partner can nominate to get the JobKeeper. Where you operate through a company, one director or one owner can get the JobKeeper. And importantly, where you have a company that basically a shareholder takes dividends in lieu of wages, and that often happens, one shareholder can also nominate to get the JobKeeper. That's problematic if you've got a few shareholders, I'll admit that, but at least someone can get it and you can work out your own arrangements there.
Yeah.
And where you operate through a trust, and a lot of trust owners don't take wages, they take trust distributions. There's the ability to get one business owner, again, $1,500 a fortnight. So that's important. I think the other key thing with JobKeeper that everybody's suddenly realising is that you've got to be paying the $1,500 per fortnight per employee. And I had a discussion today with a client that has, I think we worked it out, something like 15 employees. So that's a lot of money. That's 20, no, let's say 10, sorry. 10 employees, I can't work it out.
Okay, yeah. He's got
10
15,
employees per
10.
week, that's 15 grand a fortnight they have to pay. It was 15, so it's 45,000 a month. They have to be paying 22,500 per fortnight, or 45,000 for the first month. They have to find and then
be
reimbursed in the first week of May. So this is where business owners, and this is why we combined the two topics about the business loan and the JobKeeper, because business owners really need to plan your cash flow very seriously and make sure you do pass the 30% test, because what you don't want to do, and I cannot stress this enough, is, you know, pay 45,000 in this instance, not drop by 30%, and you're out of pocket 45,000 when you can least expect it. And worse still, you've got a government-backed loan to pay that first 45,000. So, you know, that's critical.
Yeah, it's more around it's not even just that you don't drop by 30%, that you don't drop by 30% as far as the
turnover tests and projected
the tests are concerned, which are a little bit confusing. We did talk last week around those risks. Mick, you went into a fair bit of detail around the risks that we see being involved for business owners around JobKeeper. So if anyone missed last week's recording, it is in the business hub now, you know, in your little online bit. You can just jump in and go back to it, because it's really important that you do understand that this is not risk-free.
Definitely. I mean, if you just, let's say, your own business and you operate through a company and you're the only one that's taking wages, you can do that. You can just nominate and you don't have to pay yourself because you are the owner. But the owner, the caution I'm advocating heavily is around employees and topping them up to 1,500. And the next one is now critical because it's changed in the last couple of days, is around, there's no option around who you choose to opt in or opt out, meaning you can't just decide if a casual qualifies to not opt them in, because if they qualify, it's an all-in thing or nothing. So in this particular business I'm talking about, you know, they have pretty much out of the 15, 10 are casuals.
I'm just looking at who you're talking about now.
And 10 were not earning near $750 a week or $1,500 a fortnight. So they have to find this money, pay the employees, and they're the ones getting pressure from the employees because maybe they're aware of these rules. And basically, if they pay the business owner, they have to be paying everybody.
Yep.
Now,
and that wasn't the case originally.
No.
It's only just come in the past few days.
So I'd advocate that, and with the JobKeeper, you've got to get employees to elect to participate with you, because as you know, some employees could have multiple employers, and you might be the one that they don't want to choose, and you are paying them. They might be getting JobKeeper from some other employer. So you've got to, I would advocate again, you get the nomination form before you start paying, even if you have to delay your own payment. In my example, that's a hefty price to pay to get it wrong. So the reason I say it's an all in or nothing, because employers cannot pick and choose. If you're eligible, they're eligible. There is a, I'm going to read this now. There's a nomination form, and if an employee is not paid under the Fair Work Act of 789 GD.
Oh, I knew you were going to give the whole.
That comes into it. So if they're entitled to it and you do not pay them, meaning you've selected them not to get it, and they should have, it's up to a 660-point penalty, which at $210 a pop equates to $138,600 fine. So that is considerable if you're not. If, let's say, some of your casuals do qualify and you aren't allowing them to be part of the JobKeeper scheme. So there are some dangers around this, so I cannot emphasise that enough.
Can you explain that? 660, then there's 210, and suddenly it's over $138,000.
Yeah, well, you get penalty points in the Fair Work Act, and this one's nominated at 660, and each point is nominated at $210. So that is a big fine if you're found to be in a serious breach. So it is considerable.
Okay. Yeah. So it can be a lot of money there. Yeah. Oh yeah.
So what else has been updated recently? It's important to know that you should have lodged your March BAS to qualify. The registration period started yesterday. Ian told me it started Sunday. I got your text, Ian, and you were lucky enough to register. Most people aren't having a lot of difficulty registering yesterday or today, in fact. You will have to have all your eligible employee forms. You'll start to do that on the 4th of May onwards. So you'll be nominating that with the tax office. And you'll be doing this all via the ATO business portal. There's no other option other than the business portal or your tax agent to do this. So, you know, if you're not using the digital services of the ATO, you're either going to have to get using them, or your tax agent is going to have to do that for you. So that is very important. So yeah.
Yeah, I think there is a lot of confusion around. There seems to be, on this date you do this, on this date you do that. So the one now with registering, that's just to say we want to get on the.
We want to put ourselves on the JobKeeper system.
Yeah. Okay. And then what happens on the
4th of May is when you start nominating.
May the 4th be with you.
That's when you start nominating your employees, and that's when you'll start being reimbursed. So you should have all your nomination forms from your employees by then, if not already, if you're paying them, obviously. And therefore, that's when you start, nominating confirmation or confirming on the portal that they're the employees and the numbers that you want to be reimbursed for.
Yeah. I feel like there's been a pattern for this whole government stimulus. I feel like, first of all, the government makes this entitlement or package announcement, stimulus announcement, right? Yeah. And they make it with very little detail originally. And it's kind of like almost, now that, I look back with hindsight, it's almost like, okay, we're just going to let you calm down a little bit here. We'll throw you something so that we're doing something. And initially, it really comes across as very positive and quite simple. Then the devil is in the detail. And Mick, to your credit, you've been saying that since day one. I'm little Miss Pollyanna. Everything's wonderful. Everything's happy. Thankfully, Mick, accountants are kind of trained to look for. I always say that if you give an accountant a spreadsheet with 1,000 numbers on it, it's their job to find the wrong one, right? So it's that detail that, you know, Mick and our other accountants have really been looking into. And so, you know, something like JobKeeper, you know, what we find in the end is that what started out as being fairly simple now is looking fairly complex. And I think that's been with almost every announcement.
Yeah, and there's some winners and losers. You know, the winners are the casuals in general theory, and those that earn less than $750 if they're permanent part-time.
And the business owner if it gets through.
Yeah, and the business owner qualifies if their business has been seriously interrupted. So that's the idea of the package. I mean, giving a bit of fairness, they've created some confidence by announcing the JobKeeper, which really changed the confidence of a lot of businesses. But as you said, the devil's always in the detail because, let's say, accountants and business owners do like to find opportunities. So they then keep announcing more and more to ensure that it has some integrity.
So this was something, JobKeeper was something that we initially thought, oh yeah, it's going to be fairly easy. Business owners are going to just jump on, launch this themselves and get it done. It hasn't turned out that way. It's actually quite complex, and the risk of getting it wrong that we're looking at for some of our clients is quite huge. And there are a number of risks. You know, we've just mentioned one of them today, but there are a number of them. We don't have time to go into all of them. But what we're doing at the Hendrie Group, like when I say right now, was what we were working on pretty much before we jumped on here, is putting together a service offering for our clients so that we can do it on your behalf if you would like us to do that. The trick is there's actually a lot of work in it. So the trick is for us is making sure we're very mindful that these are hard times. We have to charge for it because we need to keep our business going so that we can keep being there for you guys. But we want to make it as cost effective as possible and tailor it as best possible. So we will get some information out around that. And of course, if you want some information quite quickly, maybe email me at c.hendrie@hendrie.com.au.
And she flicks it to me.
That's right. I get to work out where it needs to go, and we can put you to the front of the queue to get some information on that if you want it.
Now, I answered Damien's question on Super on JobKeeper.
But he called you a muppet.
Did he? Oh, was that him? Well, maybe I won't then. No, you're not getting answered, Damien. Okay, so the simple answer is is Super paid on JobKeeper? I've been asked. Is Super paid if it's $1,500 exactly because they used to earn below $1,500 or exactly $1,500, which is very rare, then no. But if they're above $1,500, then yes, you have to pay Super because they already earned above the $1,500. Is JobKeeper included in payroll tax calculations? Yes, because when you pay it to your employees, it is a wage. It's taxable. It'll be included. Hopefully, you're below $3 million in payroll. Therefore, you still won't be paying payroll tax for the rest of this year, and you will be paying it next year, but it's definitely included next year.
It's an important point that you bring up because a lot of people haven't realised that this $1,500 is not a tax payment. It's income earned, and tax will be will be paid on it.
Declared by the individual as wages.
Yeah.
So we need to move on to bank loan because we're trying to keep it concise and we have 20 minutes to go. So this is, again, something that's not turned out to be as simple and as they promoted.
No, because when the government first put this out, I don't know about you guys, and sorry, Mick, I interrupted because I feel quite strongly about this one, that when this was first announced, I feel they made it pretty clear that they were going to make it as easy as possible for people to be able to qualify for this. It was going to be a fairly easy loan to get. You weren't going to have to jump through the same hoops. And we did a lot on that, and we listened to a lot and we read a lot about it. And so I don't think I got that wrong. But even in the past few days, we're just hearing about a lot of people being knocked back on the line. In fact, have you heard of anybody who's been accepted yet?
No, that's a good point. That's exactly the point. No one's been accepted yet.
That we know of.
Yeah, banks have started to get information out. So we wanted to run through something today, but have you had a rejection?
Yeah, look, yes.
Okay.
Yeah, I know one of my clients today sent me an email to say that they'd been rejected, and so that's why we wanted to drill into this a little bit. Oh, you're
Nice.
Steve, you're saying you're close. Are you close to getting it or close to being rejected? um, so we do our getting it. Oh,
Cool.
I would love to hear that if you get that win. Um, we do our business banking with NAB. And so what we thought, because Mick and I would love to be really practical and give people really practical information. So what we want to do today is share our experience with you so far, because most banks are going to be reasonably similar. Now, first up, like any other business loan, every request is going to be assessed on its own merits and on the basis of how COVID-19 has impacted your business or each business specifically, and how it's affected the working capital of each business. So the banks are going to be requesting information and detail on a number of key areas to be able to determine exactly how your business has been impacted or is likely to be impacted, so that they can consider the loan request. So what we'll do now is we'll run through some of the things that banks are going to be asking you. Now, they won't necessarily apply to everything won't necessarily apply to every business, but there's some definite overarching themes for information that they seem to be asking for. So first up, they're just simply going to want to know how the business is coping in the current situation and what measures you're taking to prepare for any impact that may present itself as this keeps unfolding. We want to wrap a little detail around that for us.
Yeah, they're making sure that you are trying to future-proof, adapt your business model, even make changes to your business based on what's happening with your business. And obviously, every industry is going to be different. Sorry.
Yeah.
Some businesses are completely shut. Well, that's pretty obvious what's going to happen there. But even then, if you're a gym owner that's shut, they want to know that you are taking steps to change or evolve your business model. So
Yep.
the obvious one is, go online,
Yep.
run classes, individual or as a group. But they want to know that you're actually doing that and charging and making effort. They want to know that you've applied for JobKeeper, you've applied for a rent reduction, even stood down staff to minimise your outflow rather than just kept paying them, so to speak. And some people have done that where they're not completely shut but still hoping to turn over a lot. So,
yeah.
They want to know that you're making some moves.
Yeah. They're not just going to go, okay, you've dropped. They want to say, okay, things are dropping. What are you actually doing aside from this loan? They're also going to be asking, what are the key cash flow drivers that you expect might be impacted? So what would those drivers look like, do you think, Nick?
Oh, there's many drivers, and again, every business is different.
Lots of variables.
Dean makes a good point. They still have to be responsible lenders, and we'll get to that at the end. But what will your sales drop by? What is your forecast? Are you being impacted by consumer confidence, business confidence? Have your customers asked for extended credit terms? These are the sort of questions we've been asked. Is a major customer gone into liquidation, or do you foresee debtor terms or your debtor days blowing out because people aren't paying?
Yeah, because basically you could still have heaps of capacity to work and may have plenty of work, but if your customers or your clients can't pay you, that's a bit of an impact.
Yep. They want to know, the economic boost, how much you might get there, and even, have you adapted your business model, as we've said. Some businesses may even have to spend some money, capital expenditure, as we say, to remodel or, change their business model. So, they're asking these sorts of things to find out the likelihood that, if they lend you money under some of the responsible lending, that you have the ability to pay that. Because at the end of the day, in business, cash is oxygen.
Yeah.
I said that last time.
Yeah.
But they're making sure that there is some cash flow and what the cash will be used for.
Yeah, because at the end of the day, it's only 50% backed by the taxpayer. So if somebody does forfeit their loan, then it's still got a find that other 50%. So I think another key area is going to be your supply chain, whether there's going to be impact there, because basically, you know, you might, as I said before, you might still be quite strong with your work, but if you're going to be impacted by like no deliveries or less deliveries or delays, like the old supermarkets with the delays in toilet paper deliveries, then that is going to have an impact down the line on your business. They're also going to ask about the whether you see an impact either now or in the future on the demand for your goods and services. You know, something I was thinking about just today is hairdressers, for example. Now, hairdressers are still open. Kind of baffles me a little bit, but they are. And the 30-minute rule has been taken away as well. But there are a lot of people still aren't going to be comfortable going in and spending a couple of hours in a hairdresser at the moment. I might be one of them, as you can see by the home dye job. Now, I haven't done a home dye job in about 25 years, but, you know, desperate times call for very desperate measures. And so there's people that aren't going, but also they're not allowed to have as many people in their salon at the moment. So there's definitely going to be, even though they're still open and running, there's going to be a decrease in demand there. You're also, Damien wants to see your haircut, Mick. Shall we show?
No, we need to get to this. We need to cover this. Come on, Connie.
All right.
You know I'm an accountant.
Yeah, so you're going to have to be able to tell the bank whether, oh, there we go, beautiful. Look, Mick's hair looks as good as ever, doesn't it? You're going to need to be able to tell the bank whether any of your fixed or variable revenues or cost lines are going to come under significant pressure. Just as an example, your business revenue could fall below fixed costs for a prolonged period. Well, the way
Damien is a perfect example there. He's in major events. I won't give his surname, which obviously as an external event coordinator, you know, you have no revenue at the moment. So clearly, you know, your fixed costs are above your revenue because you really don't have a lot. So, you know, they're going to want to ensure that you're doing everything you can in your case to minimize your overheads and those sorts of things before they'll start, you know, lending you money, even though it's been severely impacted.
Yeah, even selling equipment, things like that. So Ian's calling your hair an awesome jet ski haircut. Now, speaking of things, you're not allowed to jet ski at the moment either, but you're allowed to go to the hairdresser. Anyway, so you need to be able to tell the banks how things are going to impact your cash reserves and your forward cash flow.
And on that, I'm going to get serious again.
Okay, so that's going back on.
Is too shiny. They're going to want a cash flow, some form of cash projection.
Yeah, real cash flow.
You know, a cash flow, probably one of the most unsexiest things accountants do. And, you know, people go, well, it's, you know, what's it worth? Is it worth anything it's written on? But it can, in a time like this, can be a very predictive and powerful tool about what cash you may need to survive. To justify, because you still have to justify your loan if you're up to $250,000. So there needs to be some science around this.
The bank's really looking for that, aren't they?
They're looking for information and strategies you might have done to minimise those costs.
Yeah. So they're also going to be looking for any other strategies that you've implemented as a result of the downturn. And these, you know, we've kind of covered some of them as well, but anything you're doing to minimize expenses. So again, that's, you know, your staffing, the hours that you're doing, but also they're going to be looking for what other government assistance have you applied for. So they're going to want to know that you've already applied for JobKeeper if you're eligible. That you're doing what's your best thing you called again? Mm-hmm. The Job Easy thing or whatever.
The economic boost.
Yeah, that's right, the economic boost, right? That you've taken advantage of that. All right, so I guess they want to make sure that this is it's not that it's not the only, you're not the only thing you're doing is is going for this loan. They want to make sure that you're making other changes as well.
Yeah, so they want to see, want to know whether
I'm
you
sorry,
foresee...
can I just thank you, Kingsley. Kingsley's just written to tell me why I'm okay to go to the hairdresser. And anybody who knows me and how I feel about my hair, I really appreciate that, Kingsley. Thank you.
All right, so they're also going to, Ian, I'm not sure it makes any difference in terms of who does the submission of protected sales in terms of JobKeeper, whether you do it as the client or we do it as the agent. At the end of the day, it is still a requirement to, it's a tax act, so you still need to prove it if they audit you.
Yeah, and it may carry a little bit more weight, Ian, if your accountant's done it.
Verify the data.
Yeah, I think that there'd be a little bit more weight there. But it's also, I guess, it really depends on how confident you are about that. I mean, obviously, Mick and the others, they do these sorts. It's honestly, it's second nature. I used to make a joke that I was going to write a book called My Life on a Spreadsheet, because Mick would seriously loved his spreadsheet. So it's about whether you find it'll be easier for us to do it as well.
So they're going to know what you've done in terms of your other loans or lines of credit. So they're going to know, how are you at your overdraft limit? What have you done about your term loans? Have you deferred them for 6 months, equipment leases? If you predict in the next 6 months that you'll come under even more pressure and you're already at your overdraft limit, what have you done to correct that? So this cash flow is a very powerful predictive tool, as the science behind the lending of up to $250,000. They want to know that essentially that you've done all you can, even pause your own personal loan repayments, so that potentially you take a lower wage so that you can preserve some cash in your business. So, there's those things that they're going to want to see, that you've made changes and adjusted according to the circumstance. So, as I keep saying, cash is oxygen for a business. It's critical. They're going to basically want to know that you have some handle on your own business to get you through the next 6 months at a bare minimum. And
they're going to want to know, with those forecasts that you've taken, the forecasts that we just talked about, that you've done, or you've factored all that into that forecast as well.
Yeah. So, there's a mountain of things you can do. JobKeeper, economic boost, 100 grand up to. You can even contact the ATO. Again, another video I've done, to pause tax payments for 6 months, get your installments back. What have you done to improve your sales or even your cash collection strategies? What have you done to reduce your overheads, as we've discussed? Have you looked at your business model? My example of the gym, well, every gym's doing that. All other revenue streams, additional revenue streams you might be able to do, even state government grants, the $10,000 one. So I think Dean pointed out at the start of this little area, the banks still have a responsible lending guideline, because at the end of the day, these 50% taxpayer-backed loans, they're still required to be paid, meaning that, even though the credit code's basically been thrown out the window for these up to $250,000, they also need to ensure that you have the ability to pay this back, because your neck is on the line for at least 50% once it's up. Because I just want to probably give you a bit example as we move through, because it's a decent amount of money you'll be paying over 2.5 years, depending on the amount you borrow.
Yeah. Look, I think with that as well, I feel like the government kind of threw the banks under the bus a little bit by promising things that, or maybe not promising, but kind of insinuating things that the banks can't really do. For they can't do both. They've still got to be responsible lenders.
Yeah. So Damon's asked a good question. Is there any other state government assistance? There is $10,000 state government. Again, go to our Facebook page, because I do a video on that if you want to have a look. But essentially, your wages, you've got to be under the payroll tax threshold to get that one, and turnover, your sales have to be more than 75,000. So if you have paid payroll tax and got it back, no, you got your payroll tax back. But if you're under that, then apply to the state government and you can get 10 grand. So what I'm telling clients is that the most beneficial part about even attempting to apply for this loan is probably some form of business adjustment, the remodel, additional revenue lines, but also looking at your cash flow survival plan, doing some planning, because this is where the rubber hits the road, so to speak. Applying for a loan and going through this motion of looking at your cash flow projection will tell you what funds are required to operate through at least the next 6 months, because all these packages are around the 6-month deadline. And putting yourself through some of this rigorous cash flow planning will tell you 4 things. And four? Yeah, 4. Is that 4?
That's 4.
You got to look at what the forecast is telling you, and you got to be reasonable. The second and the critical thing is the amount of debt you'll be taking on to get you through this crisis. Is that reasonable? Thirdly, are you prepared to do the hard work once you've taken on this debt? And if you're not, or if it's a big amount you have to borrow, you may have a hard decision to make. And by that I mean, do you even borrow the money? Because sadly, some businesses may not make it through the current situation depending on their sales level and existing cash position before they started. And saddling your business with even more debt that has to be repaid in 2.5 years is not going to bode well. All you're going to do is prolong the inevitable. So you've got to really think long and hard and assess the impact of Corona and the lag impact that will have on your future sales as well, because it's not just a fait accompli after 6 months, business will get back to normal. May happen, but no one has a crystal ball on the economic effect of Corona. And that's why so many, we're up to $320 billion just in Australia has been thrown at this. Sorry, so I'll... Yeah, because you got to remember they're 50% government-backed loans, and you have 6 months. Again, everything seems to be around 6 months. You have a 6-month no repayment period, but if you then have 2.5 years to repay the debt, that is a hefty repayment. So if you use a $100,000 loan, for example, you are making repayments of roughly $3,500 a month at 4.5% interest rates each month in the 2.5 years. That equates to $42,000 per annum. So when you've gone through this rigorous cash flow planning and stress testing, can I even survive this? You got to ask yourself the question: can I support another $42,000 of outgoings if I borrow $100,000, for example, beyond the Corona, and being personally liable for half that debt?
Thank you. That's good. That's a good example.
Fast,
actually.
but good.
No, that's good. So we've only got a minute or so left. Just wanted to point out they sort of mentioned that it was going to be a low doc loan, but it's not a no docs loan. No. Mick, do you want to just quickly run through a list of what the NAB's asking for, because that's probably going to be fairly indicative for people of what they're going to be expected to provide.
NAB and another bank, I think it's ANZ, have asked for exactly the same thing. They want to know, they want your cash flow forecast. They want some idea about your cash capacity and changes we've made, all the things we've run through today. What changes have we made?
So they're going to want that cash flow in line with all those themes that we went through today.
Yep. They still want your last set of financial statements. They want to obviously put them through their stress testing software. They want your tax office portal statement. They want management accounts to 9 months ending the end of March. They want a completed statement of director position, so your A&L, assets and liabilities for directors. And so, that's the basic information they're after. So look, it's far less than what would have been required through a, without the coronavirus and the government backed and the stimulus package incentive. But it's still, you still need to justify and show some science around the cash you require.
Easy is definitely relative in this particular situation. But look, hopefully what we've been able to do though today is give you some insights into what to expect from the bank. And also, as Mick said before, the benefit of actually doing this anyway. It's definitely not as simple as it was initially promoted, but I think, for a lot of businesses, it's still going to be worth the effort. So hope that's been valuable. Maybe let us know in the chat box if it has, because that will help us to keep moving forward with these types of webinars for you. And it sounds like Mick's already got a plan for the next webinar as well. I know that there's been a few questions in the chat box today that we haven't been able to get to just because of time. Oh, thank you, Damien. Just because of time, but that's where, for that Facebook group that once you've registered, you should straight away get an invitation to the Facebook group. Feel free to throw those questions into the Facebook group. Mick and I'm going to be honest, we're not great at checking Facebook, but tell you who is? Catherine. She will make sure that if there's a question in there that we get back to you.
Is there a time to apply for loan? That's a good question, Diane, and I'd say it's bearing on sooner rather than later. They're starting to get their, can I say this? They're starting to get their shit together.
Yeah, we can say that.
You know, and there comes a point where the money's been exhausted. That's the end of the pool.
Yeah.
It's like all these grants. I'm not sure that, sorry, all these stimulus packages. There's just no more.
Yeah.
The government coffers and our future generations have to pay this back. So I would suggest sooner than later.
Yeah.
And I'd be saying by the end of May, if you want my subjective guess, because the state government grant runs out the 4th of June. So let's pick that number as a good date, because that seems to be the time frame. You've had a good 2 and a bit months then.
Yeah. All right. Well, I'm glad from the feedback we're getting today has been valuable. We'll let you go now, but we really look forward to seeing you next week, also in the Facebook group. And have a wonderful rest of the week. And as always, we're here if you need us. And don't forget, if you wanted to find out some more details about our JobKeeper service, maybe just email me directly on c.hendrie@hendrie.com.au, and we'll sort of get a rush on your information.
Or if I'm your accountant, you can email me. She's just going to forward it to me.
That's fine. Whatever works. I'm just trying to keep it really simple for anybody that's quite keen, because we will send it to all our clients. But if you're not a client at the moment, or you want information quite quickly, just give me an email. So merci to you too, to Kingsley. What's it? I can't remember what my pleasure was. It's been too long since Year 10 French. All right. Thank you so much, guys. Have a wonderful week, and we'll see you again next week. All right. See you later, guys. Thank you. Glad that it was worthwhile. Oh, good. We like making it a bit of fun as well. All right. Très bon. Yes, that's right, Kingsley. Thank you.